Today we're explaining the ISM Manufacturing Index. We're going to look at what it is, why it's important, and hang around for the end of the video because that's when we're going to explain how it affects the financial markets, which of course is the most important thing for traders. Hello, I'm Peter Martin with Trading 212, and we add new videos to YouTube each day doing analysis of different markets or educational videos about trading nearly every day. If you click on the subscribe button and the alarm bell icon, then you won't miss out. Well, let's now talk about the ISM Manufacturing Index. The ISM Manufacturing Index is a PMI, a Purchasing Managers Index. It's compiled by surveying the people at businesses who are in charge of the actual buying decisions for those businesses, in this case, at manufacturing companies in the US. And those people need to have an oversight of all sorts of important parts of the business in order to be able to make those decisions. So first of all, we have a key area of differentiation for this report than many other types of economic releases each month, in that rather than being based on hard data like actual output numbers or the totting up receipts of goods being sold, here we have more anecdotal evidence from these key people about certain key areas. So what are these key areas? Well, they're asked a series of questions about areas like employment, commodity prices, production, backlog of orders, new orders, imports, those sort of areas. And they're asked simply to indicate whether in each of these areas conditions are the same as they were in the previous month, whether they've improved or whether they have deteriorated. And then those are put together in order to compile what we call diffusion indices for each of these different areas and an overall index, which is the ISM Manufacturing Index. So let's quickly look at how the calculation is done. So this is the PMI index calculation. The index level equals the percentage of positive responses plus half of the percentage of neutral responses. So for example, out of 100 responses, let's say that 25 are positive, 9 are negative, and 66 are neutral. Then our index level would be 25. This is our positive plus half of that neutral number, 66. So that would be 33 here, plus that 25 to give us an index of 58. This number is always between 0 and 100, and this could be for any of the different areas, say for example new orders this might be, or production or employment or supplier deliveries. And then the overall ISM is calculated by adding together on a weighted basis all these different components with the biggest weighting given to new orders. So one of the good things about this report is that the data is very easy to interpret. For each of these diffusion indices, if the number comes in higher than 50, it indicates expansion in that area. If it comes in lower than 50, it indicates contraction. And if you read through the whole of the report, even a layperson really, I think, would have no trouble understanding what it's saying. It is quite simply laid out and easy to understand. The report is also very timely. It comes out on the first business day of the month after the period on which it is reporting. So if the survey was conducted in March, let's say, then the report will come out on the first business day of April. So very early on in the reporting cycle for each month, and it gives you obviously a good steer about what's going on in the manufacturing area, but also because there is quite a close correlation between manufacturing and what goes on with overall economic health. It can help you give a steer for what the economy is doing as a whole. So let's now talk about how the ISM Manufacturing Index affects the markets. Well, generally speaking, the overall headline figure, the higher that is, that would tend to be beneficial to the stock market and negative for the bond market. But let's take a look at a real-world example now by looking at some charts and seeing the impact of the most recent release of the ISM Manufacturing Index. So here is a chart for the S&P 500 index, a key measure of the US stock market. Here we are on the 1st of April. What we had out on that day was some retail sales data at 1:30 p.m. That's this candle here. That was a bit of a mixed bag, so there's a red candle there. And if we look at what the index was doing as a whole prior to this point, there's not really much going on, a bit up and down. The ISM Manufacturing Index came out at 3 p.m., which is this candle here. So we can see the market moved down just before that. When that came out, the headline level was 55.3, and the previous month was 54.2, and the market was expecting the same level. So what we got was a stronger than expected indication of expansion in the manufacturing sector. Subsequently, the market pushed higher. We can see how it rallied pretty much for the rest of the day there. Let's now move on to look at an example of the FX market. This is euro against US dollar, and we can see that similarly, 3 p.m. it had a big effect on the market. We can see this big push down in the value of euro dollar. So the ISM manufacturing report indicated strength for the US economy, giving a boost to the US dollar. And then, of course, euro against US dollar, that pushed the market lower, as we can see there. So that was just looking at a few charts there to see the impact of the ISM Manufacturing Index using the web app. Don't forget you can download for free native mobile apps for iOS and Android, and you'll find links to those in the video description. I hope you enjoyed this explanation of the ISM Manufacturing Index. If you did, please hit the thumbs up button and give us a like, or why not share your thoughts with us in the comments section. We do read each one. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. Goodbye.